Assalamu alaikum, my dear students. I'm Sadia Hussain, lecturer, Department of Finance and Banking. Today I'm going to discuss chapter 11. This is lecture number 2. In this lecture, I'm going to discuss electronic banking and some examples of electronic banking. My dear students, today I'm going to discuss chapter 11, bank deposit. This is the second part of this lecture. At first, we have to understand the concept of electronic banking. The term electronic banking or internet banking both are used as supplement. E-banking is one of the major part of e-financing. We can define e-banking as web-based banking. In other words, e-banking refers to the banking operations which is done over World Wide Web. However, more comprehensive and well-established definition is given by the United Nations Conference on Trade and Development. This definition covers almost all areas of e-banking. E-banking or internet banking refers to the deployment over the internet of retail and wholesale banking services. It involves individual and corporate clients and includes bank transfers, payments and settlements, documentary collections and credits, corporate and household lending, card business, and some others. The concept of e-banking includes all types of banking activities performed through electronic networks. It is the most recent delivery channel of banking services which is used for both business to business and business to customer transactions. Debit card or credit card. This is some part of services of electronic banking. A debit card provides for online electronic payment like credit card but from savings or current accounts of the card holder for purchases. This card is a deposit access product where cardholder uses his own money in his bank account through the debit card on the principle of pay first and use later. Debit card can be used to make purchase at retail shops and merchant establishments in the same way as a credit card is used. But in order to use the debit card, the card holder must have sufficient balance in his or her account. Debit card contains the symbol or hologram of collaborating company such as Visa, MasterCard, etc. Credit card. Credit card can be called as an equivalent of a loan sanctioned by the bank to its customers. Credit card facilities and makes it possible to use first and pay later the specified amount of credit as per the agreed terms of transaction. Before issuing the card, the bank would like to know and be sure the identification, age, level and source of income and repaying capacity. This card facilitates the card holder to purchase goods and services from the merchant establishments and shops through the collaborating credit card companies like Visa, MasterCard, etc. Interest will be charged by the bank on monthly basis for the credit provided through the card. Any service charges also will be collected from the cardholder for the transaction and processing. ATM. ATM is automated teller machine which acts like a teller point in a bank who takes and gives money over the counter. ATM is same as teller point but it run automatically through identify like card and password. It does not need any slip or check, but it is very much based on account holder's ATM card and its password. Those who are entitled for ATM card, bank has provided them a password against every single card. This is like a debit card. People can deposit their money in a bank account and they have entitled withdraw their money through ATM card, which is applicable for 24 hours a day and 365 days in a year. It has different names such as ATM, 24 hours banking card, money link card, e-cash, ready cash, etc. In Bangladesh, some multinationals incepted the ATM booth in Dhaka since 1992 to 1993. The Grainless Bank was the pioneer in Bangladesh. Then after Standard Chartered Bank, American Express Bank, HSBC, Stern Bank Limited, Dutch Bangla Bank Limited, Bank Asia and others local private banks are the followers. Phone banking. This is a kind of banking service by which clients can make their banking transactions using phone. In this case, the service is provided after verification of the client's identity. SMS Banking. Providing various types of banking services such as account balance information, request for checkbook, etc. through SMS is called SMS Banking. Internet banking. Internet banking refers to the use of internet as a remote delivery channel for banking services, which permits the customer to conduct transactions from any terminal with access to the internet. It is the www through which banks can reach their customers directly with no intermediaries. Internet banking in true sense is still absent in Bangladesh. Only 7 or 8 out of 48 banks are providing some banking services through internet that include bills payment, account balance inquiry, fund transfer among customers, account, opening or modifying term deposit account, checkbook or payout or receipt, exchange rate or interest rate inquiry, loan repayment, loan information, etc. Any branch banking. This is the last segment of our today's lecture. We can call it as anytime banking also. With the introduction of ATM and telebanking, financial details can be accessed from remote locations and basic transactions can be effected even outside the bank. Interstation connectivity of ATMs has also facilitated withdrawals from the stations, a service particularly useful for frequent travelers. The facility of using credit cards on ATMs is also available, and more recently, mutual arrangement between banks allows for the use of ATM card on the other banks' ATMs as well. My dear students, that's all for today's class. If you have any kind of questions or queries, you can call me or we can discuss it in our Zoom class. Allah Hafiz.